Welcome to episode 164 of Wealth Talk. My name is Christian Rodwell, the Membership Director for WealthBuilders, and I'm joined by our founder, Mr. Kevin Whelan. Hello, Kevin.
Hello, Chris. Good to see you. How was your summer off?
Back once again. Yes, we've taken a break in August. So, it was good. Thank you. Yeah, I did manage to go to Ibiza and had a bit of dancing and just about recovered from that. But it was very pleasant. Thank you. And how was yours?
I didn't do any dancing, Chris. No. You're like a kid going on school holidays, aren't you? Like spring break. You're American, but no.
Let loose.
I'm much more sedate. No. So, I had a little foodie trip around the northwest of England with some kind of chefy type things. Northcote was one of those, which is a very famous chef there. So that was good, and went down through Chester and then down through Cheltenham and back through Bath and back into London. So, no, good trip, and enjoyed. I love the UK. There's some wonderful places to spend in the UK. I'm going to be doing the Scottish trip in a camper van soon, and then got a little Germany trip coming up. So lots of short trips, which is what I prefer to do. 3 or 4 days every. Try and get a trip away every month if I can, as long as time allows with whatever's happening with the family.
Yeah, good. And I hope our listeners, have had an enjoyable holidays. And if you've been away, that you've had some time to relax, because, Kevin, the news is just doom and gloom at the moment.
We've had the heat wave. Now we're heading straight into the eye of a storm. I know we don't get hurricanes in the UK very much, but we are heading for a heck of a storm. And usually we talk about we like a quote or two, don't we, at WealthBuilders? And we often say it's the same economic wind that blows on all of us, but it's the set of the sail that makes the difference. And usually you can see the wind is coming from a single direction, and that's obviously a sailing analogy. But right now, Chris, we're getting it from the north, the south, the east, and the west. We're getting it from all directions. We're going to be buffeted in a way we've never been buffeted before. We've got spiraling inflation. Obviously, the big news is always the energy costs and how much of a budget it's now taking from average people. We got interest rates on the rise, and that's now looks like it's inexorable. It's going to put pressure on property margins. It's going to put pressure on people who've been on fixed mortgages. 75% of the mortgage population in the UK go for fixed rates. And when they come off those fixed rates, they're going to get a shock. And that shock is going to make them feel uncomfortable. We've got stock market volatility that's inevitably going to happen as a result of that when everything's uncertain. And the real test, Chris, when terrible things are coming, is when you get social unrest. And we're getting that. We're seeing strikes, not just in the way we've seen them from public sector. We're seeing it now with, can you believe we're getting barristers going on strike? I mean, I've never seen that in my lifetime. And of course, the train strikes and all sorts of different things. Now, I'm not politically motivated here, but I'm just saying, when you get a high degree of social unrest, it sends the news out. And the news is almost so doom, so gloom, that most people get tempted just to hunker down from the wind, and try and save their way. We're going to tighten our belts. We're going to reduce everything and constrict everything. And that's not the way to build wealth, as we'll discover. And we've got a great guest today, that whenever you get great challenges, huge amounts of uncertainty, and we're heading into that, obviously, the key skill is creativity. The key skill is being proactive and seeking opportunities when everybody else is seeking shelter.
Absolutely. Just before I introduce our guest today, we are going to be addressing this on the 14th of September. You and I, Kevin, will be holding a webinar for WealthBuilder members, and in fact, anyone who wants to join, who's worried about the troubled times that lay ahead. And that webinar is titled How to Survive the Financial Storm Ahead. It's on Wednesday, the 14th of September at 7:30 p.m. You can register now. It's completely free. Go to wealthbuilders.co.uk/financial storm. And we'll send you the details of how to join us. And on that webinar, Kevin, we're going to be sharing some real good value, some real tips that people can put into action right now to start saving money, to start, having a bit more peace of mind as to how they're going to manage, obviously, situation.
And also the creative skills that you can put in your armory so that you can build a financial fortress around you and not just be stuck sheltering from it, as I mentioned earlier on. So definitely ways to save money, and some of those are spectacular. So in an inflationary world where we're going to be showing people how to save up to 50% on some of the costs, and we'll go through all of that. We'll dive deep into that, Chris. We'll cover that, in some detail, because we want to give great value to people. We know how much they need it right now.
Yeah. Okay, so today's episode is going to be focused around our special guest, who's Mr. Simon Zutshi, the founder of Property Investor Network, very, very good friend of ours, trusted partner. And Simon's going to be sharing today some of the best strategies that people can be using in the current UK property market. Kevin, your relationship with Simon goes back a good way. Tell us a bit about that.
No, it's been a long time. I mean, at WealthBuilders, we consider ourselves a hub of excellence in all matters that relate to wealth. And therefore, we, like a central hub of support, we try and surround ourselves with the best people with whom we share values and who we share the common integrity and the style of sharing and the style of really giving in terms of how we want to kind of be known, and Simon is like-minded, and I like Simon a lot. We spend time in each other's company. We spend time on the phone every couple of months or so, just chatting to each other as fellow business owners, picking each other's brains on what's going on. So I have the most amount of time for Simon, resonate with him personally, professionally. I'm delighted he's a SaaS client of WealthBuilders as well. So, and he invites me to speak to his audience, and I'm always delighted when he's got a message to share that I think is relevant to our audience, and he's definitely got a message now.
Absolutely. Yeah. So let's not waste any further time. Let's head on to our conversation with Mr. Simon Zutshi. Simon, welcome back to Wealth Talk today.
Thank you, Christian. Really pleased to be back here.
Yeah, always great to have you on the show. And just looking back when the last time was, it was actually back in April 2021.
Wow, so that long ago. Wow.
It was indeed. So we were just coming out of obviously the pandemic at that stage, and who knew kind of what was ahead. So why don't we start there and sort of look back at that last 12 months and see what has happened since then?
Well, it was interesting, before that, probably maybe a year before that, when it all kicked off, for the May time 2020, the Bank of England was suggesting that property prices were going to come down 16%, big retailers weren't paying the rent on their units, they were all shut. So people who were investing in commercial property for the first time ever didn't get this guaranteed rent coming in, and the world was about to end, as you probably remember. And I thought in 2020 that we'd probably see a property market crash by the end of the year. However, I think the government, to be fair, did incredibly well in completely unprecedented times, stepped in. They created the stamp duty holiday. They brought in furlough and extended that several times. All the bounce back loans, which was to support businesses. I'm sure many of those, they weren't supposed to be, but they were probably used as deposits for property as well. So all of this caused an absolute boom in the market. And as we know, in the UK, there is this underlying high demand because we live in an island with a limited amount of accommodation and an increase in population. So over the long term, property prices go up. Now, as we know, property prices don't always go up. They always have a little correction. Usually after a boom, there's often a bust. And having had probably a pretty good growth period for the last 10 years, and then this little 2-year mega boom, the question is, well, what's going to happen moving forward? So would you like to know what's going to happen in the market, Chris?
Let's find out. Yeah.
Well, let me get my crystal ball. And the thing is, I guess what I really learned in 2020 is that you just never know. No one knows what's actually going to happen. And there are some people who say, well, there's this underlying demand, which I agree there is, and prices will maybe stabilize a bit, but then they'll continue to grow. Some people are saying it's gone up so much, it just doesn't stack up anymore. It's going to have to come down and correct. My personal view is I think that because of the changing legislation, so for example, we have the fact that if you have a rental property by 2025, really it needs to have an EPC rating of C, so Energy Performance Certificate of C, to be able to rent it out. So now if it's currently rented, tenants in there, you've got till 2028 to do that. But some properties, it's very difficult to upgrade them. Some you can just spend money and it'll be fine. But that, with the fact that the government's got rid of, or getting rid of Section 21, and also there's the effect of Section 24, which is where they changed the tax rates that we as property investors pay. There are more and more reasons why many landlords are thinking about, maybe I should retire. Maybe I should sell up the portfolio. There's been massive growth over the last 10, 12 years. Values have gone up. Maybe I could cash out now and just sit on the money and go and do something else. Now, that I think is an underlying thought in many investors' minds who have been doing it a long time. But then with the very recent changes this year and in the last couple of months of the Bank of England base rate going up, there are many investors who've had buy-to-let properties for the last 10 years that have been making good money for them, but only making good money, Christian, because the interest rates were really low. And with interest rates going up, those profits are being squeezed. And that's just another reason for more and more landlords thinking about selling up. Now, here's the question. I mean, that kind of makes sense, right? And all the experts I'm speaking to, we're all seeing the same thing, that more and more landlords are looking to retire. And if you think about it, in any market, you always have some people coming in who are new, who are starting, and some people are exiting and retiring. So that always happens, but we're just seeing more and more looking to retire. So the question is, if all of this extra landlord stock comes onto the market, will the underlying demand be enough to soak it up and prices continue? Or will there be an oversupply, which means that maybe prices start to correct? Now, I don't know, but if I had to put money on it, I think they're going to generally slow and start to correct. Okay. I don't think we're going to have a big crash, but hey, I just don't know. Okay. But here's the really important thing for me, Chris. And again, if you follow this logic, I think there'll be landlords who are thinking about selling up, who remember the crash in 2008, 2009, and who remember property prices, because the global financial crisis came down 20, sometimes even 30%, who might be thinking, well, actually, I'm thinking about retiring. Prices are starting to dip. Maybe I should sell now, even at a slight discount, because if I take 10% off now, it's better than having to sell at 20 or 30% in a few years' time. So I think for that reason, we will see more and more landlords looking to sell, which means actually, if you're looking to get into the game and start or get more property, as long as you know what you're doing, now is always a good time.
Yeah. And I know one of your golden rules, Simon, is always buying at discount. That's where you make your money.
Absolutely. If we can buy at a bit of a discount, it means we've got some equity trapped in the property day one. It gives us a bit of a safety buffer. And if we want to refinance to get our money out, it's easier to do that quicker. Having said that, Chris, I will sometimes buy things at the full listed price, because sometimes the listed price has already been discounted. And a slight distinction I'd like to give you and all the listeners is that sometimes people think it's advertised for 250. I've got to pay less than I've got to buy the discount, not recognizing that 250 might already be a good price, because it might be worth 270, 280. Does that make sense?
Yeah. And I guess coupled with all this, obviously this week we've had news that inflation has hit double digits for the first time in 40 years. We obviously know the energy, the fuel costs are increasing, interest rates continuing to go up. So, the demand probably is starting to drop slightly as a factor of all of that.
Let's talk a little bit. Let's talk about recession. And let's do it. So with high inflation, and I don't know about you, Chris, but I think true cost of living has gone up more than 10%. I mean, if you look at energy costs, so your gas and electric, we've seen those shoot up massively. There's nothing else apart from that in the news, really. If you filled up your petrol or your diesel, that's really expensive. If you've gone to the supermarket, my wife keeps telling me the basket of goods is costing a lot more now than it did last year, right? Cost of living has gone up more than 10%. Now, what this means is if people are paying their mortgage or their rent, they're paying their electric bills, they're paying the petrol, they're paying the increased cost of food, they've got less disposable money. Less disposable money means less money to spend on other things, which means companies generally don't sell as much of their products or services. They contract, they make people unemployed. This adds to the problem. This is how we get into this downward spiral in a recession. So there will be, unfortunately, homeowners who cannot afford to pay their mortgages or who are made unemployed and cannot afford to pay. So some of those people might also be selling their properties, which is going to add to the challenge with landlords looking to sell. So I do feel that, unfortunately, anytime recession comes, there will be lots of people who are going to lose out. There are going to be lots of victims through no fault of their own, just what's happening. However, the good news, Chris, those of us who are educated, those of us who have some courage and confidence to move forward, recognize that this is probably going to be one of the best investing opportunities this decade. When everyone else is running for the hills, as they were in 2008, 2009, if you know what you're doing and if you're holding for the long term, and that's important, that's golden rule number 4 from the 5 golden rules. Actually, it doesn't matter what happens short term, as long as it's making cash flow, and as long as you know you can rent it out and there's really high rental demand. So actually, there are going to be some winners and losers, and people listening to this podcast can choose which side of the equation they want to be on, because it is your choice.
Yeah, I was just going to say, for a lot of people, it's a difficult decision, because they're thinking, well, how can I build wealth now when I'm really needing to kind of cut back and, save what money we've got, fear of potentially losing jobs and things. But actually, now is the time you have to be thinking about how to build wealth.
And it's interesting, so there is fear of losing jobs and recession, et cetera, right now. 2 years ago, when so many people were on furlough, they had the same concern. And actually, that was a real wake-up call. I think a lot of people during 2020 realized, you know what? I've got one source of income coming in. That is not enough. I need to have multiple streams, just in case something happens to me or happens to my job or happens to my business and that income doesn't come in. And this is a second tap on the shoulder, by the way. If a recession's coming, it's just another example of how you've got to have alternative income streams coming in. And if you're not listening to these 2 warnings, you don't really want the third tap on the shoulder, because that could be a real problem for you.
Yeah. Now, of course, at WealthBuilders, we teach 7 pillars of wealth, 7 different asset classes that you can focus on. Now, property, of course, has been, your primary focus, I guess, Simon. But, obviously, you've built business around that. You've built joint ventures. You've created IP. So you've got multiple pillars there working with you, leveraging your pension as well. So, the more
pretty much most of the pillars I've actually utilized. And I think it's right. I don't think you should have just one pillar. I completely agree with Kevin's philosophy. I think you need to have a diversified structure to hold the roof up, right?
Yeah. So if we obviously looking at the property pillar, Simon, with your 20 plus years experience here, helping thousands and thousands of people to start generating multiple streams of income from property, what are some of the strategies that are really working right now, and for the next 12 months people should start putting their attention to?
Yeah, so it's interesting. A lot of people I've heard people say, oh, you can't buy properties at the moment, the last couple of years, because prices have been shooting up. And whilst I agree, prices have been shooting up. And if you're buying through an agent, which is what many people do, there's been a lot of competition and it's been difficult. It's not been easy. Having said that, a lot of our students who are maybe going direct to the vendors and helping people solve their problems have still been getting really good deals. So you can, no matter what's happening to the market, still find motivated sellers. However, I think a real focus for anyone moving forward right now should be looking at landlords, current landlords who are looking to sell up and get rid of their properties. And if you imagine someone who's got they built property portfolio over a number of years, if they sold all of those in one go, they would have a lot of capital gains tax to pay. So capital gains tax, just for anyone who doesn't know, is the tax you pay when you sell an asset that's gone up in value. Could be stocks, could be property. And it's a difference between what you bought it for and what you sell it for, less any buying or selling costs or capital improvements. So most landlords who are selling property are going to have some capital gains tax to pay. Now, we all get a capital gains tax personal allowance each year. I think it's time of recording this, I think it's £12,300. If you own a property in joint names with a partner, it's almost £25,000. So in other words, you could sell some assets in the first almost 25K if you own it in a partnership or with a relationship partner. It's tax-free, but you only get the allowance once each year. So in an ideal world, a landlord should phase the sales of their portfolio over a number of different years, utilizing that maximum allowance each year, thus reducing the amount of tax they pay. So in theory, that makes a lot of sense, right, Christian?
Yeah, absolutely.
The problem with that is if someone says, well, I want to retire, I don't want to be holding on to my last property for another 5, 7 years, whatever. I want to kind of get rid of them now. There's an amazing strategy that we can use called a purchase lease option. Now, it's something a lot of people have heard about lease options and they think they know about them, but my experience is they don't. If they knew about them, they absolutely would have done some of these deals, and they only work in certain circumstances. But what an option allows you to do, we can go to a retiring landlord, say, hey, I will take the properties on for you right now. I would take away the hassle. So rather than you waiting around 5, 7 years to sell your properties, you can go and sit on a beach now, next month if you want, because we do everything through solicitors. We can get it all done in 3 or 4 weeks. So you can take off and I'll take on the responsibility. Now, why would we do that? Well, if a landlord sold a property, they'd get a chunk of cash. They'd probably put it in the bank and it would do nothing for them. In fact, they'd lose money because of inflation. Okay. They'd lose all the rental income from the property when that's sold. So what we do, we take on the property and we give them the money to cover their mortgage and costs and a little bit of profit, not as much profit as they'd make before. So that means there's some profit for you. So you can get to make profit monthly on a property that you don't even own, which means you don't need a deposit and you don't need a mortgage. So it means anybody, we've had 17-year-olds who can't even get mortgages have been able to control houses of multiple occupation, HMOs on options and make thousands of pounds of monthly cash flow without deposits and without mortgages. So literally anybody can do this. Now, before listeners get too excited, this doesn't work in all circumstances. There are 2 criteria we need to look for to make this work. The first one is that the person selling the property doesn't need the money now. And to be perfectly honest, the vast majority of normal people selling a property, they're selling it because they probably want to use the equity, the cash elsewhere, maybe to pay down their own home mortgage, maybe to invest in a business or to do something else or pay for their daughter's wedding. That's why they're selling the property, because they want the money. However, there's a smaller group of sellers, mainly people like landlords, people inherited property, etc., who don't want the property anymore. And they don't really need the money. They probably just put the money in the bank. So that's the first criteria. Someone doesn't need the money. The next criteria, we want to have what's called favorable mortgage conditions, because we are going to start babysitting their mortgage. So the property stays in the name of the owner, that any mortgage stays in the name, but we cover the payments for them. So ideally want a buy-to-let mortgage, ideally a low interest rate, interest only. And the people who have these kind of mortgages are typically landlords. So this is why, if you're looking to buy from landlords, purchase lease options can be an incredible strategy. And the other benefit, Chris, we agree a price today, and then we have the right to buy, but not the obligation. So we look after this property for the next 3, 4, 5 years. We get profit from that property. And then if we want to buy, we can buy that property, but based on a price today. So prices might go down a bit. They'll probably come up again. So the price in 5 years' time, the value in 5 years' time is probably going to be more than the value now when we're agreeing the deal. So we get potential capital growth as well over that period. Now, that means you can either buy that property in 5 years' time if you want, or you could sell it to someone else and you get the difference between what you've agreed to pay the owner and the value of the property, what you sell it for. So this is such an incredibly powerful strategy. And most people just don't understand. They think, oh, it only works on properties of negative equity. And yes, you can use it on negative equity properties, but actually you can use it on properties that have got 100% equity. And this is why, I mean, we're doing some further training about this, as you know, Chris, because most people are completely unaware of this strategy. And well, in fact, it's really a tool, or they don't really understand it, so they're not using it. And they are missing out on a huge opportunity, what's probably going to be the best buying opportunity of the next decade.
Yeah, and I know many people that have used this and used it to very good effect. So yeah, I can absolutely vouch for that. So you mentioned some training. Well, if you can share with us some links, Simon, we can put that up and make that available.
It's happening pretty soon. So I would check, go and click on the links, go and register. It's completely free of charge. And we're going to explain, you know, what these options are, how you use it, how you sort out the legal paper, all the things you need to know to really understand if it's something you want to use as part of your investing portfolio. But it's a great way for people who want to get started in property. And, you know, Chris, if I lost everything and I had to start again, this is what I would only be doing using these particular tools, because anybody can use them in the right circumstances.
Yeah. Now, obviously, our focus is our audience in the UK here, Simon. Can this strategy work for outside of the UK as well?
Absolutely. So actually in the UK, just to be really transparent about this, right now in Scotland, you can't use purchase lease options. And that's because the Law Society in Scotland doesn't really understand them. So they recommend their solicitors not to do them. But instead, we could use something called an exchange with delayed completion. So we exchange now and we complete in the future. It's not quite as good as an option, but actually sometimes the owners in England or Wales, they don't want to do an option because we don't have to buy if we don't want to. And that might be a concern. They want to get rid of the property. So we might do an EDC here in England as well. So it doesn't work in England, in Scotland. And I think there are 1 or 2 states in Australia where it doesn't work. But pretty much everywhere else around the world, the concept absolutely works.
Yeah, fantastic. So alongside purchase lease options, obviously we know there's 12, 15 or more different strategies within property. So you teach these on your masterminds and Property Magic Live events as well. So, you know, in terms of other strategies, what are you seeing? Any differences? Obviously, you know, we've seen a massive boost with people holidaying in the UK and staycation.
Yes, we have. Yes, we have. And so serviced accommodation, or short-term lets, or Airbnb as it's sometimes called, is where you take a property and instead of having a tenant in there for 6 months or 12 months, they stay a very short amount of time. It might be a holiday maker. It could be a business person who doesn't want to stay in a hotel for a week. They'd rather stay in a little apartment. It could be contractors who work during the week and go home at the weekend. It could be families who come together for a big reunion, could be big groups. So there's all types of different type of clients. We call them client rather than a tenant. You can do this with studio apartments. There could be big houses. There's all sorts of different demand for this. And we've certainly seen in the last couple of years when COVID stopped and things opened up, certainly in the UK, there was a massive boost in what we call staycations. So instead of people having to go overseas with the hassle of PCR tests and the cost of flying and fuel is very high, obviously, so it's a lot to fly out the UK, staying in the UK seemed a real preferable option. So it's a real boost. And I believe that people can actually, because it's seen as commercial property, I think people can use their pension, can't they, Chris? Yes. If they're buying that, because you can't generally have normal residential accommodation as part of your SAS. However, this is not this is not a permanent resident. This is a short-term let. It's seen very much as a business, and so you can use that within your pension, which is great. And I think that's going to continue. And if you think about it, if we go into recession where times are hard, that people still want to get away, they still want to go on holiday, but they may not want to go or be able to afford to go overseas. They might not want to stay in a hotel. And you could have, a couple of families come together and stay in the same place because they're friends, or a couple of couples want to go away for a weekend break. Staying in an Airbnb unit together is far more cost effective and probably more fun than just having their own hotel rooms. So I think even in difficult times, I think this serviced accommodation, short-term lets, Airbnb, whatever you want to call it, I think is a really good strategy. The other strategy, because as you said, Chris, there's about 16 different strategies you can use. The other strategy that I believe is always a recession-proof strategy is HMOs, houses of multiple occupation. And let me explain why. So for those who don't know, an HMO is where you take a house and you rent it out to people for 6 to 12 months on a room-by-room basis. Now, when you talk about this, a lot of people say, oh, you mean student accommodation? Well, students is just one type of tenant. There are actually 4 types of tenants. So student is one of them, people who are going to university. Often they live in university accommodation for the first year. Then they like to move into a house because they kind of like to have parties, and they move in with their friends. And in many universities, there is an oversupply. In fact, I want to put a caveat here that in most cities, there is an oversupply of HMOs. So why am I saying it's a good strategy to use? Well, there's an oversupply of very average HMOs. There's a website you can look at called spareroom.co.uk, which is where most people advertise their rooms in this type of property. And you'll see there's lots of competition, but it's all very boring. It's magnolia walls, standard furniture. When we teach our clients is to have very high standard, what we call co-living. So it looks amazing, it's very functional. And rather than just a room in a house, people are kind of buying into a community. Now, why is this important? Well, first of all, in COVID, we had a lot of people who were living in apartments or studios on their own, and it was very isolating. And people kind of feel they want this community, which is exactly what you get in a co-living HMO. And also, when times are tough, someone to live in an apartment on their own, they got to pay the rent plus all the bills. Whereas if they move into an HMO, they might actually have more space, even though some of it is shared. They have their own room. They might have their own ensuite, but they have a shared kitchen, shared living room, etc. They'll have more space, and they're probably paying less money than they would if they're paying their rent and their bills, because in an HMO, generally the bills are included. So what this means is it's more cost effective for people. So that's why I think HMOs are a really good strategy, as long as it's a high-end HMO, not the average HMO, which is what most people have, where you're going to be competing on price. And just very quickly to finish the comment, Christian, the different types of tenants: one is students, second is young professionals, people who have been to universities, they're used to living in a shared house, they quite like that. They might move to a new city or town for a job, and by moving into a shared house, they get an instant social life, people who are like them, like-minded, friends to go out with, and it's more cost effective than living on their own in an apartment. The next group is just working people who are working in factories, offices, shops. They've not been to university, nothing wrong with that, but maybe they haven't lived in a shared house before, but now they don't live with mum and dad anymore, or either mum and dad don't want them to live there anymore, so they move into an HMO. By the way, you shouldn't really mix these tenants. Don't put students with working people, but you can put working people and young professionals together. And the final type of tenant, which I think is a huge growing market, Christian, is social housing. So people who are on benefits. Now, my advice here to people listening is you don't really want to run an HMO yourself with tenants on LHA benefits, because it's a lot of extra work. But there are charities who are specifically set up to house vulnerable people, whether they're ex-offenders, whether they're people coming out of the military that need integrating back into society, whether they are, single mothers with kids, whatever it might be, that they're providing really good, safe accommodation, much needed accommodation for these people. They get a much higher level of benefit from the local council. That means they can then pay the landlord pretty much the full market rent for the property, and they often pay all the bills as well. So, and that is a growing market. There's just not enough accommodation for these vulnerable people. So you can provide an HMO, providing much needed accommodation, helping the community, and still making money. It's what I call impact investing. So yeah, HMOs, service accommodation, I think those are the two main strategies that are kind of recession proof, that I think there's going to be big demand for them when done correctly. And also both of those, by the way, can be done with purchase lease options, because purchase lease options I talked about earlier, they're not really a strategy. They're more of a tool that can be used in conjunction with any strategy. Single lets, HMOs, service accommodation, commercial to residential conversion, commercial property, in the right circumstances, purchase lease options work with all of those.
Yeah, that's very interesting. Thanks for sharing that, Simon. And of course, you've created the Property Investor Network. So people listening now who perhaps are like, wow, curious about all of the things that you're talking about, but don't really know, well, who can I go to find out more? Well, how can I network with people like this? Tell us just a bit about the network that it exists.
Absolutely. So when I started investing, Chris, back in 1995, I bought a house, I rented out some of the rooms, and that was all there was to it, really. And in 98, I bought a second house, kept the first one. I became a landlord. And I realized that it was actually a student HMO, my first one. And I realized that it was making really good income. So I got a few more, managed to leave my job at Cadbury's. Not that I didn't like it. It was a great job, great company, great people, but I like my freedom more. And 2 years after that, by 2003, I'd completely replaced my leaving salary from Cadbury's thanks to my income from property. But you know what? Those first 8 years, Chris, they were hard. You know, I did okay, but I also made some really stupid mistakes because I didn't know. You don't know what you don't know, one of my favorite sayings. And I'd started investing in my own personal development in about 1998. And in the year 2000, I found and went to a Tony Robbins event. It was amazing. And I learned all about environments and the importance of getting the like-minded people around you, people who can support you, encourage you. And at the time, there was nothing in the UK. So in 2003, really self-serving, to be honest, Chris, to help myself to connect to other people, because none of my family had invested apart from their own homes. None of my friends have invested. They're all busy working. I felt very isolated. So I set up the very first networking anywhere in the UK for property investors called the Property Investors Network, PIN for short. And now there are 50 meetings around the country. The idea is they're in the evening, so you can go after work. And it's a great place to meet other like-minded people. A lot of people who are completely new to property, and rather than making expensive mistakes themselves, they want to learn from other people and be inspired. Because, Chris, I think sometimes wonder, well, can I really do this? Can I replace my income? Can I do it? And one of the best ways to build that belief is to meet other people in your local area who've done exactly what you want to do. Then it means it's possible. And absolutely, with the right knowledge, the right mindset and support, you can absolutely do that if you decide to do that. So you can build your belief. You can make local contacts. You can get recommendations for builders, solicitors, all the things you kind of need, as well as learning some of these strategies and how to do it. So it's a great way to really dip your toe in and find out if it's right for you. And I think, Chris, we'll probably put a link somewhere in the show notes or below the video to PIN meetings. It's pinmeeting.co.uk. And I think, Chris, we have a code for you. I think it might be WealthBuilders, but we'll check that if people want to come to their very first PIN meeting to check it out for themselves, it's normally £20 to come along, which is just a bargain. But if you've never been before, you can use the code as WealthBuilders gift to you to come to your first PIN meeting completely free of charge. And if you're listening from overseas, we actually have a virtual PIN meeting the first Wednesday of every month. It's at lunchtime, 12 noon till 2 p.m. UK lunchtime. And we have people from all over the world who want to invest in the UK, kind of join that virtually to learn more, connect to people on the ground in the UK who can help find deals and do some of the running around for them. So it really is a great supportive environment to help you become a more successful investor and get there much quicker than you would on your own.
Yeah, that's amazing. Well, thank you very much for that. And absolutely, I'll share that link alongside, obviously, all the information for people to find out more about the purchase lease options as well there, Simon.
Thank you.
Just finally then, for people listening now, obviously this is Wealth Talk. We're committed about helping people build their wealth to reach that place of financial independence where they don't have to trade time for money. The next few years definitely looking like they're going to be a little bit turbulent, Simon. So just any final words you'd like to share with people just to keep their spirits high? Yeah,
absolutely. And look, I think we are going to have difficult times. The press is talking about recession. We can all see the increasing costs and the effect that has on the money in our pocket. So it's a reality. The question is how you decide to deal with that and how you interpret it. Either it's doom and gloom and, oh my God, we can't do anything. And look, what's happening, you can't do much about it, but you can absolutely take control of your financial future. And, being part of WealthBuilders is a really smart thing to do because you have these different ways of people creating income, and property is only one of them. And I think you should have, a diverse portfolio of investments bringing money into you. But it's not as hard as you might think it is. Thanks to things like WealthBuilders and the kind of training we do as well, you don't have to go and work it all out yourself. You can get help. You might need to invest a little bit in yourself, but by investing in yourself, it's probably the best investment you'll ever make, followed very closely, I believe, by property, then business and other things as well. But you know what? Investing in yourself gives you a bit of a psychological upgrade, a bit of a boost because you're backing yourself, and particularly in property, one of the things we teach is at some point, most people run out of their own money. And rather than having to stop investing, you can use other people's money. But if you want someone to invest in you, well, you've got to have invested in yourself first of all, because Someone investing in you wants to make sure that you know what you're doing and you're not going to lose money. And you can lose money in property if you don't know what you're doing. So investing is really important, but you don't have to do it on your own. Help is here, and you can get to financial freedom much, much quicker than I did it. It took me 8 years because I was doing it on my own the hard way. So my final words are, look, help is here for you. You just need to reach out for it, seize the opportunity, and recognize that the next couple of years, although it might be difficult for a lot of people, it could be actually a huge opportunity for you. So make the most of it.
Yeah, great words to leave us on there, Simon. And we enjoy working with you immensely, and we look forward to obviously continuing to do so. So thanks again.
Really appreciate it.
As always, lots of good value from Simon there. Obviously, many, many years of experience. He's seen the market cycle occur, and, you know, can really draw upon that. And yeah, great stuff for us to dig into there, Kevin, which we will do in just a moment. But we've had plenty of reviews coming in whilst we've been sunning ourselves on the beach and filling our stomachs with nice food up north. So I'm going to read one out from GP, who's a Wealth Builder member, says, for me, joining the Wealth Builders Academy has been a life-changing experience. From being given a series of inputs and challenges to confront, to being assigned an excellent coach, to showing me the power of leverage in knowledge, time, connections, resources, and more. I've matured in these 12 months, probably more than at any point in the last 20 years. I took the program seriously, and I dived into a new way of doing stuff, of getting myself out there and building relationships. For somebody like me, it was gold dust.
Very interesting review. And Chris, you know, whenever you go on holiday, we get a bit rusty, don't we? So I stumbled a bit a few minutes ago, and you definitely stumbled with your reading there. You need to read a bit more. you need glasses now, Chris. Are you getting older?
Maybe. I've got a birthday coming up next month. So yeah, another year passing. Yeah. Right. So thanks, GP. Yeah. You know, we have absolutely love having GP in the community, and you know, obviously GP's an academy member. For anyone who's interested in learning about how we help our members to actually create, build, and protect wealth, we have a program which is the Wealth Builders Academy. You can find out more by heading to wealthbuilders.co.uk/academy.
Yeah, so just before we move on to Simon, who's obviously a consummate professional in what he does, I want to make a comment about GP. GP came out of his shell so much in this last year. I can't tell you how much connecting he did, but with integrity and with style. He always did things with style and a smile. And, you know, from somebody who's Italian, you know, Gianpaolo, English is not his first language, but to have so much enthusiasm to connect. And now he's studied to do his own IFA exams, and he's passed those. So he's now going to be a professional financial advisor. And I've said to him, look, you can call on me at any time to get a tip or two, some guidance or two, because you've got to take your hat off to anybody who creates that kind of connection when his native language isn't English. I mean, obviously he can speak for the world, right? You can't really shut GP up, but he knows that. He'd be laughing now if he was listening to it. But that's who we just love in our community. And so thanks to you, GP, and thanks for continuing to favor us and to stay with us in the community. The Wealth Builder community is even stronger by having you in it.
Yeah, totally agree with that. Okay, so thinking about some of the things that Simon shared with us there, and Simon was a guest about a year ago. We were just coming out of the pandemic, and he mentioned there that some of the predictions, certainly from the Bank of England, you know, perhaps didn't quite go the way that they thought. And what are your thoughts on the Bank of England, Kevin?
Well, it's a bank and it's in England. But apart from that, you know, it's interesting when you've got a period of time like we're seeing now. I'm worried. I'll tell you why I'm worried. Is because the only tool the Bank of England can use to combat rising inflation is traditionally, and it's the tool they will be using, and you can see they're using it now, is to put interest rates up, which exacerbates the problem. It doesn't solve the problem, because, see, the problem at the moment is not that inflation is demand-led, it's supply-side-led. In other words, there's problems everywhere with supply, and that's what's driving prices up. And you can't solve a different problem with the tool you've used historically. But of course, the only playbook they've got is rising interest rates. Now that's happening in America as well. The Fed are on the same journey. They're doing the same thing, but there's a very delicate balance to play because, Chris, in the last decade or so, the biggest borrowers are the governments. The Fed are the biggest borrower in the States, and Bank of England are the government are the biggest borrowers in the UK. And if interest rates keep going up, then it's going to cost more to run the economy because we'd be paying much more of our GDP, the things we produce as a country, much more of our overall revenue in servicing sterling debt. And this is not going to be a good place. So I'm not optimistic about how the Bank of England are there to solve the problem. I think, if anything, they might even cause more. But that's me being not political, but just looking at it from my own perspective, which could be right or wrong, because like Simon's crystal ball, it's still broken, it's still in the cupboard. I don't know if I've ever get it out again, because you can never see clearly because the world is so unpredictable and so uncertain. And we're getting so many life-changing events that are unpredictable, black swan events, like the pandemic, even like the heat wave. We're getting everything thrown at us, and this storm is coming, which is going to be unprecedented. And I think we need to prepare for that.
Yeah, which is why we're so passionate about helping anyone and everyone who wants to learn about wealth to, understand how to think like an entrepreneur, not just to follow that same path that, as we say, so many people will be following, which is just, be scared from the news, hunker down, not make any changes, try and save, but not expand, very much contracting. And when it comes to building wealth, there's always certain language that people need to learn and get familiar with. There was certain language Simon shared, which is more property led, Section 21, which is around the change in eviction rules, and Section 24, which is to do with mortgage interest. But, the language is important here as well.
Yeah, whenever you're building wealth, you're going to be learning new language. And for some people, new language can be a challenge, and they can kind of close down their ears and their mind when they hear language they don't understand. So thanks for taking a moment to explain Section 21 and Section 24. And if you've listened to the podcast for a while, you'll have heard a whole raft of different words you may not have heard before. SaaS, the wheel of wealth, debits, just so many different things. And in every pillar will have its own language. So you have to be willing to learn a new language, not like GP learning a whole new language, but you have to learn individual words and get to know what they mean and not be frightened by them, but to take time in a community to understand what they mean so you can use them. And once you've used them a few times, you get really comfortable and confident with them anyway, Chris.
One of the points that Simon made, or observations, was that naturally some landlords will be looking to start offloading some of their portfolios. They will have, remembered the difficult times from the last economic crash, and so opportunities will be arising if you know how to find them. And one of the opportunities that Simon talked about, one of the strategies that he particularly feels can benefit not just the landlords, but of course the investors, is purchase lease options. And Simon explained in detail there, what purchase lease options are all about. But you have to be creative, and that's what that entrepreneurial thinking is all about. Is kind of what else can you be doing now that allows you to find deals in a difficult market?
Unquestionably, creativity is the challenge. And for many people, if you mentioned, I think we've said it 3 times now, hunkering down. If you're hunkering down, you're not creative. You're constricting yourself, you're worried, and you really are not being open-minded to new things. So I would encourage anybody just to be open-minded, just to look at what's going on and see opportunity. Don't close down the opportunity. Even if you see it and see what other people are doing, at least you're open to the idea of the art of what's possible. And even if you don't do it, you spectate. Nothing wrong with spectating for a while, but wealth building is not a spectator sport. It's a participative sport. And you participate when you get to a place where you understand, you get good support, you're connecting to the right people that you feel trust and you feel resonance with. You do your due diligence to make sure you're managing your risks as far as you can. There's no risk-free anything in the world. And then you take the right action. And if you do that, which we all know, Chris, is the wheel of wealth, it's embedded in the very essence of what WealthBuilders is about, then you should be able to make some progress. Anybody can make progress with what's going on right now. I'm not saying purchase lease options is the right for everybody, but take some time to understand it. There's no one strategy that's great for everybody, but creativity in itself is a great skill. It's resourcefulness. So how you build your resources is you become more resourceful. You don't go back to doing nothing. You can't save your way to wealth. It's impossible to save your way to wealth unless you want to live a frugal lifestyle where literally you're compromising everywhere. I'm not for that. I'm not for counting your cappuccinos and that kind of budgeting lifestyle. I'm not interested in that at all. It's so much easier to expand your means and to expand your mind. And I encourage everybody to find a community in which you can get that expansion. It doesn't have to cost you anything. In fact, we give so much, Chris, completely for free. We obsess about how much we give away for free, because we know if we do that, that might just be that one bit of knowledge, that one piece of inspiration that guides someone to, instead of just listening, to participate in their own wealth. And whether they do it with us or not, that's not our key. Our key is that in the end, many people will gravitate towards working with us and our community will get stronger as a result.
Yeah, absolutely. We certainly see ourselves as that hub that leads off to all things wealth in all directions. And Simon has actually given me a link to a more detailed webinar that he's recorded actually around purchase lease options. So that is in the show notes. So if you're listening now on your phone, tap and click on that. If you're interested, jump on completely for free. Some really good education there.
Yeah, I mean, when people are giving free education, consume it, because you might get a blinding flash of the obvious. You might just get something that goes, that's for me. So just go in open-minded. Don't prejudge. Prejudging means prejudice. Don't be prejudiced about somebody else's ideas. Be open-minded. Learn something. Dismiss it if it's not for you. Embrace it if it is for you. But either way, we've got so many people who are willing to share free content. Yes, in the end, they hope that you'll find a way to them. That's fine. That's life. But you don't have to. And so just, jump on the webinar.
Yeah. Now, coming back to that word of creativity, Kevin, obviously different ways to be creative within property, but there's a way to be creative with the funding as well. And Simon talked about pensions briefly with, being able to purchase some types of property, so more commercial-led property, sometimes serviced accommodation that you can actually hold within your pension if you have a SAS pension. So perhaps just expand on that a little bit.
Well, look, you're absolutely right, Chris. And if you think about the storm that I mentioned, one of the winds blowing at us is the rising interest rates. So when you get rising interest rates, lenders make a bigger margin. That's what they do. They make more profit. Their underwriting gets tighter, which it did in 2008. And as a result of that, you become less able to control your source of funding. Now, if you can bring a source of funding that previously you've overlooked or you've undervalued, somewhere it's in your life, and pensions is the perfect example. Now, we'll be touching on that in the webinar because we believe that there are two things you can do to be creative with your pension. Number one, cut the costs, make the cost of running that pension dramatically less. That's the very least you can do. And we're going to show you how you can do that by 50%. You can cut your costs typically by 50%. Now, in an inflationary world, if you can cut your cost on something by 50%, it's got to be worth knowing, right? Second is if you can learn how to harness your pension and turn it into a wealth building tool. Now, SAS isn't for everybody. The small self-administered scheme, you're going to Google that, fine. It's not for everyone, but it's for people with limited companies who've got an aspiration and ambition to grow their wealth. Now, if you can do that, the chances are, instead of being just on the stock market, you can turn that into property. If you can turn that into property with a greater predictability of revenue, and also potentially, and I'm just talking about potential, a higher return. If you cut your costs and improve your returns, you're going to be building your wealth. So you're going to be cutting a path through this wind. And I think that's a key thing. So being in control of your funding, particularly in property where Simon specializes, is a key skill. And we're seeing now communities of people getting their pensions and almost, creating communities of funding, not in any form of rushed way, not in a way to circumvent any rules or due diligence. It's just to say, hey, we've got money. If you imagine the average SAS pension is worth, say, 300 grand for the sake of a number, and you got 100 people doing that in a community, you've got millions of pounds worth of money which can be used to help, that you can share in the value with people you share values with. And that's where we started by talking about Simon. So, we share his values, and we would like you to share in the value of his knowledge. And anybody else as well. We bring lots of people who are our partners to the table to share their inspiration. But when it comes to property, Simon is really at the cutting edge of his game.
Yes, so thank you for Simon sharing all of that wisdom and knowledge with us today. And the free resources, don't forget that Simon offered is the opportunity to go to a PIN networking meeting. If you haven't been before, you can get a free ticket, and the code and the link is in the show notes today. And of course, the purchase lease options webinar with Simon as well. And if you'd like to jump on with Kevin and myself next week on the 14th September, for our How to Survive the Financial Storm Ahead webinar, then head to wealthbuilders.co.uk/financial storm. Okay, I think we've greased the cogs, Kevin, after our...
I think they've picked up a bit of the rust.
We'll be running smoothly for next week. But until then, Kevin.
Until then, my friend, see ya. You didn't even remember the end, Chris. Now we're let's leave it in. We'll do better.
We'll catch up same time, same place next week.
See you, my friend. Bye-bye.